The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 16th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. You know, the most important aspect of trading is capital preservation, and that's the real beauty of the Nadex platform, because your trade is your stop. Your risk is your risk. Your stops are automatic, and the market can never gap you out. Nadex is an incredible way to trade, and you can tune in each day from 1 to 2 o'clock here at TFNN. Our resident expert on the Nadex platform is Darrell Martin. He can't be with us here this morning, but he will be back at the 1 o'clock show. If you haven't had a chance to check out the Nadex platform, do yourself a favor. Go over on the right-hand side of the TFNN homepage. Click on the Nadex button. You can get set up in just a period of minutes. He's got an incredible show out there. He's always teaching people, showing people even live, how to make money out there. So you want to go test drive that system. Let's begin today with a beautiful thought. This is a beautiful thought for Friday, and it's this: live life fully while you're here. Experience everything. I mean everything, folks. That means, you know, when you're grabbing some ice cream, get a different flavor every now and again. Take care of yourself. That's critical. And, of course, take care of your friends. Have fun. Be crazy. I say even be a little bit of have a little bit of weirdness out there. Go out and screw up, because guess what? You're going to anyway, so you might as well enjoy the process. Take the opportunity, though, to learn from your mistakes. Find the cause of your problem and eliminate it. You know what I really mean by that, folks? And this is the secret. If you use this secret throughout the rest of your life, or better yet, just pass this on to your kids, your friends out here, this is worth its weight in gold. Because what most people do is they focus their time on their problems. Look, we've all got problems. I don't know anybody that doesn't have some problem in their life. Some of us have more than others. Some of us just got bigger shoulders out there. What you need to do, when I say find the cause of your problem, I mean spend 5% of your time on the problem, the other 95% on the solution. You would be amazed at how many people do just the opposite. You tell me which one is going to get you faster to where it is you want to go. And don't try to be perfect. Perfection, I hear people talk about perfection all the time. It's a standard. It's the lowest standard. That's the cool thing. That's the interesting thing about it. It's the lowest standard possible. It cannot be achieved. Perfection doesn't exist out there. Just be an extraordinary example of being a tiger or a tigress out there. In any event, let's go check out these markets out here. You don't want to hear me on my soapbox, even though I love that soapbox. Right now, we've got the Dow. It's up 16 points. The S&P is up 35 cents. NASDAQ up 8. Russell 2000 up $1.30. NASDAQ 100 up $8. New York Stock Exchange up 2 points out here. We've got Goldilocks up 5. Silver's up 13 cents. Light sweet crude is up 33 cents out here. Our call-in number is 877-927-6648. We're getting that expected kind of flat to a little bit of a bounce in the market. That was to be expected with that 13% increase, one-day rate of change, percentage rate of change in excess of 10% yesterday. So the market is really doing what it's supposed to do. The VIX index, though, interestingly enough, right now is trading back at the 1383 mark. It's trading just slightly below that 50-period exponential moving average. Doesn't really matter what it's trading at right now. The key is it going to close at about 1398 or so higher today and stay above the 50-day exponential moving average? That's the real number to be paying attention to. That's the number to be paying attention to at the end of the trading session. In order for the bulls to take control of the market today, they would need 4,022 net advancing issues. Well, I always like to think that things aren't impossible. That one, though, folks, that one is impossible. There's no chance, there's no way that will take place today. So the Bears are going to have the control of the market through the weekend. If we go take a look at the futures market here, let's go see what we've got going on out here. Take a look at patterns. Let's go take a look at 120-minute chart. We know where the bulls are hanging out. And where the bulls are hanging out is right here, right down to that 1654 level. Every time the ES Mini pushes down there, the first time that it pushed down was coming into the 5:30 time frame yesterday evening. Then we saw a little bullish engulfing candle up into the 7:30 time frame. We saw another little bullish engulfing candle at about 9:30 in the evening. We saw the market push back down into it until about 1:30 this morning. Then we saw the bulls step in and fight and protect this area. We saw the market push down here as we came into the 10 o'clock time frame, and we're seeing the market. We're seeing the bulls really defend that area. So 1654 is a very defensible area. We know where the bulls are hanging out. And that's inside the S&P futures. Let's go take a look at what's going on inside each of the ETFs out here and get a feel for what we are looking at here. Yesterday, the diamonds moving down with major league conviction, coming into the sign of strength. That sign of strength here that I'm referring to is the one between July 5th and July the 8th out there. We had a nice gap up. That was with 5 million shares. Of course, yesterday was a huge gap down, twice the volume. 10 million shares out there. The price stopped right at that level, meaning right at the top of the gap, which was at 151.09. Yesterday's close was at 151.12 out there. But when you come down into an area, a breakout area with volume, it just says you're going to go lower. In the case of the diamonds, today now trading below that trend line that takes us all the way back to the November 16th area. That trend line has held up until yesterday. So that is showing you a change of control as well inside the Dow diamonds. Hey, to go up and test that trend line and reject it, that would be a natural and a normal thing to do. We'll see that take place, whether that's today or it's Monday or Tuesday or something. That is a natural thing when price breaks through a trend line. What the Dow diamonds what the diamonds want to do is they want to get back and test that June 24th swing point. And we'll see what kind of volume. It's summer. We'll see what kind of volume comes in at that level. There's 14 million shares. If it gets down and it tests it with lighter volume, what it's doing, it's setting up a trading range. A trading range that would take you from the 145 level up to 156. That's a heck of a nice trading range, but that's what would be setting up if, in fact, that June 24th level holds. That's on your Dow diamonds. Let's go take a look at the IWM, the Russell 2000, one of the stronger of the indices and the ETF indices. What did it do yesterday? Well, it had a sign of strength as well. It wasn't July 8th, such as the one we were looking at inside the Dow diamonds. It was on July the 11th. Had a gap up, 34 million shares. The prior session was 36 million shares. If we take a look and use that as a benchmark, well, yesterday moving down with 50 million shares. Now, the gap held, so it's a first line of support out there, so that's good. But when you come down into that area with the volume the way that it did, it says what? It says you're going to be back down there. Well, you're testing it here today. If we take a look at that little blue and red squiggly line on my screen, that's your 9 and 18-day exponential moving average. Today, we're seeing a little kissing cousins going on right here. They're both kissing each other. They're both at the 103.50 range. A close of the 9-day below the 18-day. It's a lagging indicator, bearish nonetheless. So you will see you'll see one of the stronger indices give you a couple of different bearish signals. What does that set up? Well, the first thing that it sets up before it provides us with any information is going to be a test of the May 22nd high. That is at 100.38. That is with 68 million shares out there. That is where the IWM wants to head to. Just like the Dow diamonds want to head to June 24th, the IWM wants to go test out that May 22nd level. If it gets back inside the May 22nd level, that spells trouble. That trouble there will go ahead and take you down, most likely to June 24th. And what you would be looking for synergy between the two ETFs, let's take a look at this one as a strong one, the Dow, the diamonds as a weak one out here. You'd want to be looking for the diamonds to be moving into the June 24th level with volume. That would be saying it was going to go ahead and break out that June 24th low and that the IWM would get back inside the range. Just the opposite. If the Dow diamonds are coming down into the June 24th area on light volume and the IWM is coming into May 22nd and rejecting that, with lighter volume. That's what's going to set up the trading range. Inside the IWM, the trading range would be the top of May 22nd to the high that was put in back here on August the 5th. So we know what to look for, and now it's just a matter of being patient and sitting back and waiting to see what type of information the market gives to us. What we do know is we saw some volume off of the highs out here. We saw that volume off of the highs inside the IWM because it was consolidating up at its highs, and you saw the first sign with 50 million shares off of that high yesterday. Let's take a look at the other strength inside the marketplace. That would be the Qs out here. The Qs most certainly with volume off of the high, 39 million shares to the downside. That was after making a high with 23 million shares on August 13th. Little bearish engulfing candle with 29 million shares the prior day, and then yesterday down with volume. Now, the kissing cousins of the 9 and 18 day, they're not kissing here just yet. And the first area that we're going to be paying attention to also for the Qs are going to be that May 22nd level, which is 74.95. Now, that had 59 million shares coming in yesterday with only 39 million shares. It's going to need some giddy up and go. If it can get below May 22nd, it'll move down and test that rising trend line out here. May not get all the way down to June 24th, but the first test would be that rising trend line. That is inside the Qs. Let's go take a look at the SPYs. Let's finish this off. Take a look and see what the SPYs are doing. Yesterday, gapping down with volume. That was volume also off of the high. 152 million shares coming into the breakout. It also had a breakout on July the 11th. That was a breakout. That was a 135 million shares that were traded that session. Yesterday down with 152. Closed below that gap right now. The SPY's just testing the top of that candle of July 11th, or the bottom of the candle of July 11th, which is 166.54. Intraday, it's been up to 166.52, so it hasn't completely gotten up there. Trading inside the gap out here. The gap, it doesn't look like it's, let's see if it's been closed. The top of July 10th is 164.63 so far. We've seen a low of 165.87. So, no, that has not been tested. What the SPYs want to do, you can see the SPYs here now getting below that trend line. The second time through it, the first time was with accelerated volume, which was on the trading session of June 20th. Volume there was 321 million shares, so quite a bit more than what we saw yesterday. In fact, twice as much volume as we saw yesterday. Nonetheless, we've got volume to the downside and light volume to the upside, and that's inside the SPYs out there. If we go take a look at some of the core stocks, let's go see the behavior of some of the core stocks. Let's go look at IBM as well as Exxon Mobil out here. If we take a look at IBM, IBM now broke through on lighter volume, no less. That April 22nd swing point low at 9.8 million shares, but you gap below it yesterday, only doing with 3.6 million shares. IBM is now going to come back and test the original breakout area that I'm referring to that goes back into January of 2012. So it's been around for quite some time. We'll see if IBM can hold that area. It's like a 30-point consolidation zone. That may be a buy point, or if that area gets broken, that may be a sell point. As IBM is getting down into this area, you can see it's also in that oversold condition. But it does have a bit to go to get down there, which is about the 183-ish range, 182. It's trading at 186 right now. 877-927-6648. Be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Had a request to go take a look at Tesoro. Ticker symbol is TSO. So let's go dive into it. Let's take a look. We'll start off here, and we'll do it kind of in reverse order, meaning instead of taking a look at it, and the question was looking for it as a buy. So we're going to take a look at this, starting off with the monthly chart, to understand what it has done out there, what it's doing right now, and then we'll work our way back. So we'll go from the monthly, we'll go to the weekly, then the daily. Maybe we'll even take a look at an intraday out there, depending on what it is that we find. Now, what we can see here on the monthly chart for Tesoro, let me just update, make sure I've got everything out here. There we go. So as we take a look at Tesoro, we can see that it made a 100% move of a move. And what I'm referring to there, I'm going to draw a black line across my screen. 100% move of a move. When we take a look at this, it made a high back in October of 2007, got up to 65.98. Then it worked its way all the way down to the lows back in November of 2008. It gets down to 671. So it goes from, loses basically 90% of its value, right? About $67 to $6.70, somewhere right around there. So that was a pretty big loss of value. Makes its way all the way back up to the $67 level. Gets up to $65.75 back here in May of 2013. Probably was May 22nd when it made that high out there in the daily. We'll go see if that's in fact what took place out there. So it gets all the way back up there. That's a 100% move of a move. Now, when anything does that, it's like running a marathon. When you run a marathon, you're typically not ready to go do the next sprint, and you're going to do something different. You're going to move sideways out there. In fact, if we go put on the overbought, oversold indicator, you can see on the monthly chart, it was moving into the overbought level back here in March of 2013 and continued to make a higher high on less relative strength. That's a divergence. That's telling you, guess what, that as it makes that 100% move of a move, that even if it tries to break out, it's not real. It's doing it with less energy. You know, it was telling you on that that it was waiting for that marathon to be over. And sure enough, candle-wise, you got a bearish engulfing candle the very next session in June. So that says that you've got real good resistance now up here at 65.75. Now, it's a heck of a trading range that it's in, right? From $7 to $70 out there. So it's one you want to be paying attention to, but you're almost better off, at least at this stage, until we'll take a look at the pullbacks, places where to buy it from. But if this were to break out above $66 or so, that would be one heck of a nice break, especially if we were to do it with some conviction. What we're seeing here is really two bearish engulfings out here. So the bears inside this thing on the monthly chart are saying they want to protect the territory of 65.75 out there, and they may not let anybody or let any of the bulls through that gate out there. Now, that's on the monthly chart. Oops, I didn't mean to do that. Now, let's go take a look at it on a weekly basis. Let's go see if on a weekly time frame we can find anything out here that gives us any kind of caution. And just like we saw on the monthly chart, on the weekly chart, we're seeing that price moved up on less relative strength. You know, it made its relative strength high right out here, the trading session of March 8th. Price got up to 59.56. It made its actual high during the week of May 24th out there. That makes sense. So we're going to find it was that May 22nd spike inside here. Now, what you don't see on the weekly chart out here is you really don't see the bearish candlesticks. We saw that nice thrust right out here on May 17th, but now that we're below that area, what we do see that's bearish on this is this hammer candle right here. So let's put a line across the hammer candle onto Soro, and that's a weekly hammer candle. That is April the 19th, and that's where it's trading into right now. The low of that hammer candle is 47.98. It's been down to a low of 48.14. Volume this week, this is without today, 11.5 million shares versus 18 million shares. So it's coming to that hammer candle nicely on light volume out there. So that'll have to make us say, we need to think about it. But you got to wait for the session to close out here. But that would be the most positive thing. Now, this hammer candle also created a three-candle formation here called the Morningstar. So this is you got two bullish configurations at the price level of 47.98. But here's the deal. If this thing closes below 47.98 at any point in time on a weekly chart, price will come all the way back down to about the November 2012 area. How about that? Down to around $35 or so. If we take a look at the retracement level, if we take a look at the retracement off of the lows, and when we get back from the break here, we'll go take a look at the daily chart. It's made the 0.382 retracement, so it should be up against some decent support. But after the weekly, after the monthly chart, and knowing that it's coming into this hammer candle here, I think it requires some patience. But we'll take a look at the daily. So we're dissecting and bisecting. You can see on the daily chart here, we now have price below that 200-day exponential moving average. Looks like we might even have a hammer candle right here that's below on the daily. But we'll be right back to take a look at Tesoro.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 11 points. Really flat market out here. S&P is flat, down 31 pennies. So we're going to go back here real quickly to Soro. And then I believe we've got Darrell will be on the line with us to finish out the hour out here. Now, back on to Soro. We're taking a look at the daily chart. So on the daily chart here, what we can take a look at is we can take a look at the hammer candle that formed here on July 3rd. Now, the volume of that session was 3 million shares, and yesterday came down through that with 4 million shares, so it was coming out. I don't think it closed below. Let's see. The low of that hammer was 49.26. The close yesterday, 49.34, but coming down. Now, we're trading below it here today, so it closed below it today basically is going to be giving us a confirmed, or should be close to giving us a confirmed A to B equals CD down. So as we take a look at the Tesoro, the A to B equals CD down. It's below the 200-period exponential moving average. The 1-to-1 says 41.45, but it looks to me more like it would do more than a 1-to-1. More likely a 1 to 1.272-ish, which would take it about 36.98 at 37.95. You've got the 0.618 retracement coming off of the lows from May 7th of 2000, May 8th, 2012. That's also an area that was tested as support. There was a little bit of a break, a nice sign of strength on August 13th with 15 million shares. So if it's coming back there on light volume, what that's actually going to do is that's going to go ahead and set up a Gartley buy pattern. And so that's going to be somewhere around the 36.98-ish range inside Tesoro TSO. So what I would do is I would sit back patiently for that. And at least that's a pattern that is set up right now. So let's go out. Let's see how our chatter boxes are. Darrell, Martin, are you out there?
I'm out here, man. How you doing?
I'm doing great. Yourself?
I'm doing awesome.
Okay, good. We're testing out a little bit of sound here live, a little new system out there. So just letting Al know, and I'm getting a little bit of echo in my ear. So not that I can't work through it, but it just does sound like I'm out in the mountains in Colorado.
You want me to try this new thing out, so we'd hop on and check it out. So we got another new box coming in next week as well that'll be pretty sweet.
Yeah, now you're sounding good. So I don't hear any echo when you're speaking. I just hear my echo when I'm speaking out there. So maybe somebody out in the den can tell us also what they, how it sounds. But in any event, nice markets that we had yesterday. We had some nice trading last week when you and I were doing the shows. I wasn't looking for any intraday trades or anything out there, but anything that you're noticing in the market or anything that you're taking a look at on what looks like is going to be a very quiet day out here.
Yeah, it's pretty quiet right now. I went in this morning. I was looking for some, several potential plays and setups. But I was looking at the USD CAD possibly for maybe a 20 or 30 pip move. We got that 20 pip move. I was also checking out as a potential, and this is sort of a strategy I was looking at this morning on the euro dollar. You have the University of Michigan Consumer Sentiment Report come out at 9:55.
Okay.
And this is just something I'm playing with, demo trading right now. But there's sort of an advantage to that because on Nadex, they have expirations at 10 o'clock, okay? And so you can literally hop into a trade where there's only 10 minutes left, like in the binaries or the spreads.
Yes.
And potentially put on a trade with very, very low risk. And if there's just a minor move, like 10 to 15 pips, you could have a nice profit. And so I'm looking at doing a trade like that. And I mean, it was nothing. Nothing moved at all. And so I'm even adding in the possibility of doing what we call a strangled butterfly. And so you go in and, if you put a chart up, it's basically saying, let's say the euro dollar is at, 33.60 or whatever, okay?
Yes.
If the euro dollar stays between 33.70 and 33.50, you'll profit on what's called the butterfly, the iron butterfly. So like an iron condor type thing, okay? So it's a range-bound strategy.
Yes.
And then we do a strangle where we go in and we buy, say, the 33.80 and sell the 33.40 for maybe $10. So you're bringing in $50 on the butterfly if it stays flat. You'll make $90 if it breaks out on the strangle, but you'll lose $50 on the butterfly. So you're basically looking to go in and you're risking about 60 on the trade. But if the market stays flat or breaks out, then you actually have the ability to profit $40 on a trade in about 5 minutes.
Yes,
and you got a wide range. There's only there's basically 20 ticks in the market where you lose because you got the butterfly and then you have the strikes right outside of it for a strangle. It's a little bit more advanced, but it is the bull bear binary hour, right?
No. And so you're taking a look at a report that's being released at 9:55, and on the Nadex platform you've got some contracts that are closing out at 10 o'clock. So you're taking a look at a little 5-minute window out there in order to place the trade.
Exactly.
Yeah.
You're hopping in I'm hopping in at 9:50. I know it's going to expire at 10. So I mean, think about options have time premium in them, right?
Yeah.
So, but what if they only have 10 minutes of time premium in them before they expire? They're going to be super cheap.
And
so
is it the currency pairs that are closing out at 10 o'clock? Is that why you were focused on?
Actually, every market has a 10 o'clock close.
So why would
10, 11, 12,
so just kind of a question? Why was it the euro necessarily that you were looking at versus maybe the ES or something like that?
Well, I found that the FX pairs move more consistently than the indices on most of the news reports.
Okay.
So you'll get moves on the indices, but I find that I can actually get better, consistent, measurable statistical results on Forex pairs.
Yes.
So because, it's a government fundamental report, which should it directly impact that currency, whether it be a euro report, a pound report, a dollar report, whatever. And so I'll actually go through and I'll analyze all the reports, and I'll look at ones that, I usually focus on ones that have an average of, at least 50, if not 70 or 80% breakout of 50 pips.
Yes,
so, I mean, they'll at least move 50 pips. If they do, then I got a trade where I'm either break even or profitable, and then I'll go, okay, the average range from high to low is, say, 80 pips. So, we talked about this last week, so if I have, maybe a range between 50 and 80 pips that I'm going for a trade, and by having their stats in my favor, it's just knowing your probabilities. You got to put probabilities.
Oh, no, yeah, no question. Yeah, it's too bad the way that the Euro-US dollar, and I put the 5-minute chart on my screen. It's too bad that wasn't. Okay, you were about 25 minutes too late on the move out there. Unfortunately,
well, actually, if you would have
did have that spike up. It did have that spike up.
Well, you would have actually had profit on a butterfly.
Yeah,
because it didn't move. So. What you doing? Yeah, you got that big spike right there. If we go in and zoom in over here, and I'll pull up the 5-minute charts, and right here, let's say you get in at 9:50, okay, and then you got that little spike, and then it came right back down. But the spike happens so fast, a lot of times you can't do anything with it. But that spike was right after 10 o'clock.
Yes. Yes.
But it stayed range bound. So, and that's the beautiful thing about a butterfly is you go in here, and I'm pulling this up on the chart. So basically what you're saying is if it stays, say, between 33.70 and 33.60, okay, then you'll profit on the trade if it does that, through 10 o'clock. Mm-hmm. And then on the strangle, you're doing the opposite. You're doing a breakout. So you're saying if it, breaks out of 33.80 or if it breaks out of, say, 33.50 down here,
yes,
then you'll profit. So you're really looking, it looks like a big, move, but it's not. I mean, I'm just really zoomed in. It's only 10 ticks.
Right,
right there. So basically, if it stays in this range, you'll make money, or if it goes outside of this range, you'll make money. The only place you sort of have that dead zone is in between, like, say, 33.70 and 33.80, or 33.60 and 33.50. So that's where you'd lose. But if it takes off, or if it stays flat, you can make money. So it's sort of a cool way to combine a lot of probabilities in your favor when doing a trade.
Absolutely. Hey, let's go to a caller. We got a caller on the line, Jim from Valrico. Jim, thanks for calling. Thanks for holding. How can we help you out?
Yes, sir, Steve. Thanks. How are you today?
Doing great. Thanks so much for asking. You ready for a nice weekend?
Oh, yes, sir. Yes, sir. I was just calling about Nugget. I'm in there, and I just don't want to give up all my profit. How far do you think it's going to pull back?
Well, it's a great question. The time frame that you're looking at on the trade, or where'd you get in, or
I got in at 677.
Okay. Let me put up the Nugget. I was looking at the GDX here, so give me a second here. NUGT. So as we take a look at it, yesterday you had a nice breakout if it's just like the other one. So if we take a look at the trade, looked like this was probably a confirmed A to B equals C to up yesterday, and it went ahead and completed the 1 to 1.272 move. The B point on this, July 23rd, 35 million shares, and yesterday moving up was 63 million shares. Boy, you like to see that. Now, you said you were in at about
677, I think, or something.
677. So, as far as so at this stage here, you haven't seen a reversal candle. What you've seen price do is move up into the next level of an A to B equals CD, which is 1019. Your next potential bar to hit would be up at about $11.58 out there. So let me take a look at, yesterday was up with volume of 63 million shares, been trading for an hour, and it's back with 24. So it's coming back with some pretty decent volume out here. I'm going to put this on an intraday chart for you, Jim, just to take a look at it, see what's going on with this on the 10-minute basis out here. See, from a volume standpoint, let me just refresh my screen. So it looks like I had a nice big volume spike inside the Nugget, but let me just to make sure this thing uploads properly. Yeah, so that was right here at the 9:40 session. So far on the pullback, it's pulling back right into this volume bar. Are you watching on Tiger TV by any chance,
Yes,
Jim?
I am. Yes, sir.
It's pulling right back into this volume bar that took place yesterday afternoon at 1 o'clock. The low there is 877, and the high is 919, and they had volume of 4 million shares, and you're into that bar with 3.2 million shares. So you seem to be back into that area with some light volume. If you're really trying to play this thing tight, maybe what you are going to do is put a. Do you have a stop in this at all at this stage?
No, I want to let it run just a couple of days, last 2 days, and let it run. I was afraid to put a stop in. I almost put one in last night, like at 9:15 or something. But then it was taking me out already.
Well, now here's one thing I want to say though. If it did take you out, and you made a profit of what sounds like about 50% or so.
Oh, I know it. I got good profit.
Yeah. So sometimes that's not such a bad thing. In fact, we can never in this game here we can never complain about making money. That's got to be the first cardinal.
Yeah.
First cardinal. Now you're also playing with dynamite here, right?
Oh, I know that. I was down. I was down to 5 something on it when I first bought it.
Okay, so here's what I'm going to suggest as the best as an option out there. I don't know if you've ever done it, but you've got nice profits in it, and you want to go ahead and let this thing run. Why not just take your principal off the table, and you've got free shares just sitting there?
Right.
That's I can tell you on the daily chart yesterday, you had a nice move in gold, you had a nice move in gold and nugget, and the gold miners are all going to follow each other out here. And I can tell you, it looks like it wants higher price out there. But this becomes that decision. Do you take your profits now? Do you take some of your profits? Do you move to free shares? The first thing is you got to trade. You only trade your beliefs. If you believe that it's going higher, you got to put a stop in somewhere.
I know that, but last night I went over and over this to determine about my stops, and I just couldn't make a decision where I figured 15%, put a stop back under 15%. But then
one of the things that I like to do. So look, I'm in a bunch of mining trades myself. And so what I've done here, and let me see if I can pull this up on a different screen for me. I like to let the market go ahead and take me out, and if it's going to. So the average true range over the last 10 days on the NUGT is 96 cents, all right? And what I like to do is take that 96 cents, because that's just the average movement on a daily basis inside Nugget. What I like to do is take some Fibonacci expansion of that number, whether it's 1.272 or 1.618. I can tell you what I did last night was I used the 1.272. So that means basically you would be giving this about $1.27. So my stop on this would have been $1.27 below yesterday's close. Right. Yesterday's close was $9.85, less right. $1.27. That's where I'd put my stop, and I wouldn't change it other than increase it. Meaning that, I would take a look at today's high and might consider backing it off $1.27 off of today's high out there, as kind of a trailing stop. And if the market takes me out, then so be it. If it's going to trade outside its average true range, so be it. I can always get back in, right?
Oh, sure. Honestly.
This is about wanting to protect your profits. So that's another way to take a look at it. Now, I'm not saying you have to use the 1.272. Right. You can use a tighter stop, or you can use a wider stop, 1.618 even out there. And then you've got that other choice, which is to just simply go ahead and either take all your profits or go with free shares. And right. So you're in a situation where you really can't lose. The only way you can lose is to not have a stop in place and honor the stop.
Up. Give it all up, yes.
Yeah, because that you don't want to do. Having a winning trade turn into a losing trade, that's bad. That's a bad deal out there. So even if your stop were to get jumped, you'd still go ahead and let it take it out and take whatever profits you've got, and then come back, reassess the trade, and try to figure out what it's going to do. But with yesterday's move up in the metals market, if the metals are going to move higher and the mining stocks are going to go with it, it should be pretty comfortable trading with inside that average true range. So I hope that helps you out, Jim.
Yes. What are y'all not doing the gold and silver anymore?
No, we're not doing a Tiger Metal Exchange. Just too many other things to focus on.
Right. Okay. Well, thanks a lot, Steve.
Okay. You have a great day. 877-927-6648. We get back. We're going to go to Joe in Revere, Massachusetts. Be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour with your hosts, Darrell Martin and Steve Rhodes. Got the 10-minute chart here for light sweet crude up on. A lot of stuff going on over in the Middle East out there. And you got light sweet crude, just on a 10-minute chart here, it's got about a 80 to 90% consolidation range it's been trading into. It's trying to bust out the top of it, which is about the 107.87 mark. Came in there with a nice wide-ranging bar as we came into the open, the 10 o'clock show here, doing with about 5,800 contracts out there. So if it can get a close above on a 10-minute chart of the about 108, we'll call it, we'll see it move up to 108.80 pretty quick, I would think. Now, I'm going to go back real quickly here to gold. I want to show you folks, as well as Jim, who had called in earlier, what to be looking at on gold. Now, there's gold is running into some pretty significant resistance. Remember, old resistance becomes new support. And that's this little red squiggly line here, which is the 40-week, which is the 200-period exponential moving average, just simply on the weekly chart out here. And you can see that gold hasn't closed above this level since the November 23rd, 2012. So that's what's kind of getting a little bit of the backfill that you're seeing inside some of the mining stocks out here. If gold can close above that level, which, by the way, is 1366, you're at 1366 right now, that'll be pretty impressive out there. Let's go to Joe in Massachusetts. Joe, how you doing? Thanks for calling.
Hey, Steve. How are you today?
Excellent. Thanks so much for asking. You want to take a look at the DXD? That means you're short the Dow. Are you in the trade, looking to get in? Tell me what you're doing.
Well, first off, I want to know, I'm not in any of the averages on shorts yet, and I wonder if it's still the one I should short. The Dow's still the one I should short.
I still like the Dow as a trade because it is the weakest, and so when I short, I like to be able to take a look at the Dow. So that's one that I would be looking at. As far as where to enter the trade, boy, that's a good question. You could try to scale into it. I think you've got to wait until Monday, maybe Tuesday of next week. See how it handles the gap here. On the DXD, it would be 33.62 might be your first place to target, and the other spot would be 33.16. I would say also, to answer that question, pay attention to the 50-day exponential moving average and the VIX. If it closes back below that area, then you should be able to wait. We should be then forming the B to a C of an A to B equals C to up. And then you want to be a little bit more patient on trying to enter the short trade. And you'll also have some more information to know whether your question should it be the Dow that you short, because you'll want to go ahead and take a look at which indexes are pulling back on light volume. And if it's the Dow that's pulling back on light volume, look, the DXD could pull back to 32.76 and have nothing wrong with it. And if it pulls back in with light volume, that would be your place to fire away. So pay attention to the 50-day on the exponential moving average today. If it closes above the 50, you probably have to get into this trade a little sooner than later. All righty?
Okay. Quick question then. About how far back would you put a stop?
Same thing. I would take... Yeah, same thing. I would look at the average true range of the DXD. That means go take a look at the last 10 days from high to low. Figure out what that average is, and then multiply that times 1.618. That would be my stop. Take whatever it is you're going to trade. Let's say you have $100,000 in capital. Don't risk more than 1% of it. That would be $1,000. Take $1,000, divide it by whatever that stop was. If it was $2, then you buy 500 shares, and that's how you'd trade it.
Okay.
All right.
Thanks very much, Steve.
Hey, yeah, you bet. Thanks so much for calling. Rick in Orlando, I'm sorry that we couldn't get to you. Stay tuned, though. Basil Chapman is up next. Darrell, thanks so much for joining in. Have a great weekend. Folks, you have a great weekend as well. We'll all look forward to seeing you on Monday. But don't forget, Darrell will be up at 1 o'clock today doing the Nadex show. Take care, guys.
Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.